Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Steady gains on Dalal Street as key indices gain over 0.25% each. Mid-caps gain in line with frontliners. Fortis Healthcare surges after Burman and Munjal sweetened their bid for Fortis by 250 crore. This after IHH revised their offer last evening. Earnings heavy day today. TCS Indusind coming out with their fourth quarter numbers today. The Supreme Court dismisses the plea to order an independent investigation into Justice Loya's death, says there is no ground to suspect foul play. But first, the market. Steady going in some parts of the market. Neeraj is here, as always, with a closer look. Neeraj.
Hey, afternoon, Harsha. And turning out to be yet another good day, just for one small thing that is not happening, which is that the banks are not performing. So Nifty Bank is down in the session today. I know the conversation is revolving around what's happening to the commodity space. So people are looking at what's happening to the Vedanta, the Hindalcos, Nalcos, and the SAIL and the JSPLs of the world. And yes, the Nifty Metal Index has been that one steady or one rock-solid performer. Steady is an understatement, to be honest. All of these stocks are doing well. But look at the flip side. Look at what's happening to BP, HP, IOC. Those guys are getting clobbered in trade. We just recently, last week, got notes about how Goldman Sachs or some of the others believe that there is value now in these stocks. Certainly, people are not finding that because all of these are down. And then a couple of other interesting things. One, Titan. Harsha, nudged the mark of 1,999.70 was the all-time high. From there, the last two sessions, it's really come off. The Morgan Stanley notes speaking about how they are finding the valuations to be a bit stretched. So no alarm bells. Maybe the growth numbers stay rock solid as they declared any which ways, but some bit of profit booking seriously. $50 on Titan is no mean feat. That's about a 5% pullback in last couple of days. So that's come off. And today the PSU stocks seem to be doing reasonably okay. I mean, aside of what's happening to SAIL and others, that's fine. But, you know, Hindustan Copper, STC, MMTC, that entire clutch of names have some really strong gains, some very strong volumes as well. Don't quite know the reason thereof. Hindustan Copper, you can still assign the nickel price uptick to that stock doing well. But STC, MMTC, all of them as a pack are doing okay. So some sporadic moves here too.
Interesting that. Neeraj, thank you. That's the markets for you. But the big story today is about Fortis Healthcare. It's one of the most sought-after acquisition targets right now. Existing bidders are revising their offer, new ones are joining in. All of this may end today, though, if the board can narrow down to one bid, that is. Yatin is standing by to take us through the details. Yatin, first, make a quick recap of the timeline of this race for Fortis.
It's a sure race for Fortis, and a lot of potential bidders coming in and showing and expressing interest. And let's start with what exactly happened and how really the bidding process or the bidding war really start. So we had Manipal Hospitals on March 23rd. They made an unsolicited bid to the board of Fortis Healthcare, and post which on March 28th, a plan which was laid down by Manipal Hospitals for Fortis Healthcare. And we have Manipal, which later on April 10th revised the offer for Fortis Healthcare. Of course, there was a 20% revision in the hospital business valuation from close to 5,000 crores. They were now offering close to 6,000 crores. Of course, on April 12th, 2 days later on, we had the Hero Group and the Dabur Group's family offices, the promoters' family offices. So the Burman family and the Munjal family coming out for making a binding offer. Of course, this was a direct equity infusion rather than a restructuring of the operations for Fortis, unlike what we had Manipal offering. IHH on April 13th came out with their offer for Fortis Healthcare. Of course, this was subjected to due diligence and various procedures, and including shareholders' approval. On April 17th, a Chinese healthcare company, Fosun, made offer for Fortis Healthcare at 156 rupees per share. So that was on April 17th. And on April 18th, we had the shareholders of Fortis Healthcare, the existing ones, which moved for a notice for the extraordinary general meeting, in which they proposed to remove 4 directors of Fortis Healthcare and replace them by 3 independent directors. So, that is another interesting aspect to the entire transaction. On April 18th, IHH, sort of revised the entire offer, or probably gave in more details as to how will they put in money. Their offer was close to 160 rupees per share, and they said they will be infusing close to 4,000 crores into Fortis Healthcare, subject to due diligence and shareholders' approval. So IHH clearly coming out with a better plan. April 19th, and we spoke with Mr. Munjal on this one. Hero Enterprise and Berman Family Office also revised their offer, making an offer which was 1,500 crores in terms of infusion, in which they said that 750 crores will be made available upfront by them, and this will be not subject to any due diligence. So they basically made the process very clear that no due diligence here. Here is the 1,500 crore offer coming in from our side. And of course, today the Fortis Healthcare Board meets to decide as to what the strategy should be. Should they call a EGM? Should they engage with Manipal? Should they engage with IHH? So this is something which will be quite important and interesting to watch out for.
Let's get to the specifics now. There are four bids on the table. Yeah. What would this board meet today assess? And given the fact that there are 4 bids on the table, and each of them presents their own value, and some of them complicated, some of them pretty straightforward. So what's the board evaluating?
Well, if you look at the Manipal Health, earlier offer, that was, valuing the hospital businesses close to 5,000 crores. This is what I told earlier. They also intended to infuse 4,000 crores. So this was basically Manipal TPG combined, and also they proposed to buy 20% in SRL, which was held by Fortis. And of course, after the opposition coming in from minority shareholders, the revised offer was sweetened by 20% in terms of valuation for the Fortis hospital business. They would be doing a rights issue in which they place both Fortis existing shareholders and themselves at par, and no share purchases to be done in SRL, which means that moving forward, if the demerger or the scheme of arrangement had to happen, this would enable a smooth listing for SRL, which is the diagnostic business. So this is the Manipal offer revised by close to 20%. Also, we had the Berman family and the Munjal family offer. Earlier, the investment was 1,250 crores. Of course, that was also subject to proper due diligence. 500 crores by the preferential issue, 750 crores post the due diligence. The new offer was sweetened in terms of the deal structure. 500 crores straight from the preference issue, 1,000 crore by the preferential issue at a price of 161 rupees 60 paise. So this is the best offer that Fortis shareholders got in terms of price per share. And 25% would come in upfront since it's a warrant issue. So 750 crores straight come into Fortis Healthcare without doing any due diligence. So this is what the Berman family really gave out. Of course, these are the final details as to due diligence was waived. Further funding requirements also will be supported when they have to really put in funds for the RHT acquisition. Then coming to IHH, earlier they said that we are valuing the company close to 160 rupees per share, and they want to do a limited due diligence for a period of close to 3 weeks. Now they say that they will be ready to infuse up to 4,000 crores at a price of close to 160 rupees per share. They need a few due diligence and the capital infusion via the equity, which is to the tune of 400 crores. What IHH proposes should also trigger an open offer, unlike the offer of Manipal, which does not entail an open offer. And finally, we had Fosun, which said that we are ready to do a capital infusion at a price of 156 rupees per share. So, roughly this is what the board needs to evaluate. Of course, they need to take into account the interest of the minority shareholder, and the fact that 4 directors are proposed to be removed by institutional investors like Eastbridge Capital as well as Jupiter Funds, and that is also something that the board needs to take into cognizance.
Any specific reason of what, how that will play out in the overall story of the EGM asking for these guys to be removed?
The current, so the rationale probably to remove the directors of Fortis Healthcare, because, post the Singh brothers exited the business because of the pledge share getting revoked. We had the old management still continuing, and probably the minority shareholders believe that either the board is incompetent or they're not taking into account the interest of minority shareholder. So they plan to remove, these 4 important directors which are currently there, which is Mr. Tempest, Harpal Singh, Sabina Vaishnav, which was recently appointed by the board of Manipal, and Tejinder Singh Shergill. So all of these 4 directors to be replaced by a new set of independent directors is what the minority shareholders or the institutional shareholders of Fortis currently are proposing. Of course, the EGM has to be called, it has to be put to vote, and that will be probably the litmus test for the current board. If at all the changes were to happen, probably the minority shareholders will control the company, or probably the independent directors will control the operations of the company and probably take a decision which will probably be much more efficient, is what these shareholders believe at this point in time.
Yatin, thank you so much for that. That's the story of Fortis. The board meeting is taking place today. We'll get you more as the story unfolds. Let's talk about TCS. After Infosys cut its margin guidance for the current financial year, watching out for whether TCS will also follow suit. Crucial is the TCS's digital deal wins in the fourth quarter. Agam is standing by with what analysts are pricing in from TCS this time around. Agam.
Well, Harsha, I'm not sure if we can compare Infosys and TCS, but if you just go by the numbers, we're certainly expecting TCS to, report stronger, slightly stronger earnings in comparison to Infosys. That said, let me just start off with what we can expect from the quarter. So when it comes to the top line, we're expecting about 2.3 to 2.4% growth in rupee as well as the dollar revenue terms. And this is on a sequential basis. When it comes to margins, we are expecting a slight expansion at around 25.5%. And consequently, we could actually expect profits to move up by as much as 4.3% quarter on quarter. Now, among the things that I'm watching out for is the margins guidance. The first reason is that, while TCS has always maintained that they will be looking to make margins of anywhere between 26 to 28%, they have failed to do so far. And the second reason is that Infosys has lowered its guidance for FY19. Now, these two factors do, tend to make a lot of these analysts and investors think that there could be a little bit of temperance when it comes to TCS's margins in FY19 as well. Moving in among the factors behind the expectations, we do know that TCS has, come up with some very, very large deals, signed some very large deals over the last 4 months, and that is likely to come and show up in the numbers. Don't forget, its deals with Nielsen and Scottish Widows is front-ended, so we could expect a large chunk coming in from this quarter as well. Of course, there will be an advantage when cyclical spending when it comes to its traditional businesses, and don't forget, we do have some amount of cross-currency tailwinds which may, aid margins. That said, when it comes to some factors that we are watching out for, first and foremost, their big digital wins, because last quarter TCS signed its largest digital deal, and we're expecting a continuation of that trend. We're also expecting more tie-ups with respect to their Internet of Things, analytics and clouds as well. And of course, we're looking out for their outlook when it comes to the BFS segment, where they are in a wait-and-watch mode, and consistency perhaps in retail and manufacturing sector. But on the whole, we're expecting a steady quarter, if not a really good one, from TCS this time around.
Agam, thank you for that. That's TCS for you. Wait and watch out for those numbers expected later today. Mindtree posted a strong set of numbers last evening. Mid-cap tech companies truly giving its large-cap peers a run for their money, especially in the digital space. Dollar revenues rose by 5.5% to 226 million. That's ahead of consensus. Margins expanded to 140 basis points to 13.4%. Boosting profits that jumped 29% to 182 crores. Strong earnings also coming in from Mindtree's deal wins. Total contract value rose 22%. This was largely thanks to renewal in contracts. Mindtree also won a large order from the aviation industry. Agam caught up with Roster Ravanan, CEO at Mindtree, and to get details of that project and the contracts in the digital space in particular. Listen in.
Our new win that we announced this quarter. This is an existing customer of Mindtree in the US and in the airline industry. This customer entrusted their entire quality assurance or testing function to Mindtree. This was done through great relationship that our teams have built with the customer, and also the great delivery we have promised and we have delivered to the customer over the last few years has convinced the customer that we are the right partner when they were looking at radically redefining their testing function. So that's the largest deal in the history of Mindtree to today. Multi-year, multi-tens of millions of dollars of deal. We didn't disclose the deal value due to client confidentiality requirements, but to date, that remains the largest deal in the history of Mindtree. Zooming out of that for a second, across many other customers, geographically, India, Europe, US, service line wise, whether it is digital, whether it is run the business kind of programs, we are getting a lot of traction from our customers based on the strategy and the investments that we have made. So multi-year, multi-million dollar wins across many of our customers, across many of our segments, shows that we are well positioned when the demand environment turns in favor of more specialized players like Mindtree.
Mr. Ravanan, a lot of these investors are also extremely heartened by the fact that we've seen an over 20% sequential growth in your total contract value, and a bulk of this comes in renewal of contracts. Can you give us an idea about what these contracts are and how much of this has to do with, change in business side of things?
A reasonably large portion of our contract wins in this quarter was in the grow the business piece, in a very broad term that we define as digital. So if you look at this quarter, overall deal wins was about 300 million, of which about 102 million was digital. So our piece with our strengths on digital are resonating extremely well with the customers, and in many of our renewals we are able to upskill and get more more trust of the customer, either a larger piece where you have taken away market share from others, or change a small one-year engagement to a multi-year engagement. So across both duration and across both volumes, we are able to get much more traction with customers today than we used to in the past.
That's Mindtree for you. The stock is up about 2.5% in trade today. From IT, let's talk about banking. Indusind is also expected to maintain steady growth. Shraddha is standing by to tell us what the street is pricing in from its fourth quarter numbers. Shraddha.
Usually there are no surprises from this bank. So this quarter also the consistent earnings trajectory is expected to continue, especially given the kind of positive commentary that we had from the management in the third quarter, especially on the vehicle financing side. So in terms of numbers, net interest income is seen about 20% higher at 1999 crores. Net profit is seen growing by about 28% at 964. And when it comes to the net interest margin print, that should come in at about 4% levels that they have been maintaining for multiple quarters now. Loan growth is seen at between 20 to 25% sort of a number on account of growth in the vehicle finance book, also the non-vehicle consumer lending portfolio, and also corporate credit demand pickup, which Romesh Sobti has spoken about the last time around. Asset quality expected to remain stable, so gross NPA is seen closer to that 1.1% sort of a number. But if a divergence, if any, could be reported in this quarter, remember during the third quarter numbers, RBI's audit wasn't completed for this bank. So if there is anything, that will get reported this quarter. So that's one thing that we are watching out for. Also, the CASA liabilities generation has already exceeded their target of 40%. So you could see them upping their CASA target. We'll be watching out for comments on growth and net interest margins, and also for the credit cost guidance for FY19. Delinquencies in the Diamond loan book will be important to watch, especially given the Nirav Modi scam that was that came to light, and the bank had clarified they have a small two-digit exposure to Gitanjali Gems, and overall they've also spoken about interest in acquiring insurance and mutual fund businesses. So that's another aspect to watch out for, but broadly no surprises expected.
Shraddha, thank you for that. Well, you can catch the management of Indusind just a short while from now. Romesh Sobti, MD and CEO, will address the media on their fourth quarter numbers. That's coming up in a moment from now. ACC, meanwhile, was the first cement major to report earnings late last evening, surpassing analyst estimates on most parameters. Nikki standing by to tell us what aided these numbers this time. Nikki.
Sure, we look at an extremely strong quarter performance coming in from ACC. Top line growth was in line with the estimates. Net sales were up by 15%. This was led by a good growth coming in both from growth as from the volume front as well as the realization front. The volumes were up as much as 8% higher year-on-year basis, while the realization too picked up steam and was up by as much as 6% year-on-year basis. EBITDA was up by as much as 18% for this company to a number of 491 crore, higher than the 380 crore that we were estimating. High realization and cost optimization techniques mainly led to a beat in operating performance. If you look at the raw material expense, that as a percent to your net sales came down to 16% from 24% that we've seen in the corresponding quarter of the previous year. Also, PAT was seen higher by 16% on year-on-year basis for this company. Lower tax outgo along with depreciation combined with your cost-saving techniques had led to a beat in the bottom line performance of the company. Notably, what weighed on the margins was the rising pressure that we saw coming in from the power as well as freight and freight expenses. However, the company in its outlook said that increased government spending on infrastructure is expected to get in more demand for not only infrastructure but also cement sector. Lastly, it has sought a shareholders' approval for making royalty payments to its shareholder. Now, it's unclear if they're just talking about the minority shareholders here. This is for the period of 3 years and it's for the technical know-how with the parent. Earlier agreement for a royalty payment expired back in December 2017.
Nikki, thank you for that. It's been a strong March quarter for HDFC Life with a 24% jump in profits. Bloomberg Queen's Ridhima Saxena caught up with the Executive Director and Chief Executive Officer Bibar Padalkar to decode the earnings for the quarter gone by. Here's a slice of that chat.
The fund value of unit-linked products will, if markets perform poorly, fund value will come off if the policyholder has a large exposure to equity. So that is something that we can't control. The NAVs will come off. But if the same unit-linked policyholder has a higher debt component or has a more balanced mix, then the impact of a fall in markets will be that much shock absorbed. Yes, to answer your question, the fund value is like any other industry that has exposure to the markets. Little that we can do about their own personal choice in terms of what their risk appetite is. But from the company's financials point of view, that is not a significant impact.
Correct. And also, by when do you see the ULIPs portfolio kind of shrinking to 50% as you had intended it to be from the beginning of Q1 FY18? You've been saying that we want a 50% exposure to ULIPs.
So typically that tends to happen. One is just based on the markets. Sometimes the pull of the markets is that it's difficult to curtail. More than curtailing it as such, what we would like to do as a strategy is that we would like to sell more profitable products to balance the fact that unit-linked products are being sought after. And hence are finding other parts like protection, and we've done well on protection as well. So you'll find both have gone up, and hence resulting in a post-overrun margin of 23.2%.
So what would be your outlook then for the next year? How do you plan to sustain the return ratios at 26-25%, which has been the case so far? And what would be your strategy to do that, if not pricing?
2-3 things. So in terms of new business margins, we will not write business that does not give us the kind of margins that will get us to these kind of levels. So we do end up saying no to a lot of business that we believe is either poor in persistency or intrinsically the product is not going to make you that kind of returns. And so you will see that we might not be the number one in terms of top line.
Yes.
Part of that reason is exactly this, wherein we would say no to a lot of business. So it is on an eye on profitability, and we have to find ways, and this whole digital and technology journey has been that we are able to reap some of these rewards. And, and not to forget all the new business tie-ups that we have, the number of partners that we have tied up with, and over a period of time, from being, just having probably 24 partners to over 130 bank assurance partnerships is not a small journey, I think, and that will help us continue to remain, to find these pockets of profitability.
That's the management of HDFC Life. The Supreme Court, meanwhile, has dismissed a petition seeking an independent inquiry into the death of Justice Loya. Special CBI Judge Brijgopal Harkishan Loya was presiding over the Sohrabuddin Sheikh fake encounter case when he died. A 3-judge bench of the Supreme Court said there is no ground to suspect any foul play. Arpan Chaturvedi, who was at the hearing, reports on what transpired at the court today.
Well, the Supreme Court in its judgment, which was read by Justice G.Y. Chandrachud, who was part of the bench, has made it clear that there is no merit as far as the ordering of an independent investigation into the death of Judge Loya is concerned. And apart from that, we also saw some very strong comments from the Supreme Court judgment as far as the conduct of the petitioner or the manner in which this case was argued. And basically the judgment says that there were some serious allegations made, which is an attack on the credibility of the judiciary. They said that there were allegations made against the Administrative Committee of the Bombay High Court, against the judges of the Bombay High Court, and also the judges who were hearing this particular case in the Supreme Court, with a specific reference to Mr. Bhushan's comment, Mr. Prashant Bhushan's comment on Justice Khanwilkar and Justice Chandrachud. So these are, and again, the judgment again goes on to say that there is no reason to doubt the testimonies of the judges which were given to the police, four judges who were with Judge Loya, and they said that there is no reason for them to doubt the testimony of these judges. There were some comments also made on the PIL culture, where they said that that political rivalries should be sorted out on the playground of democracy and not through PILs, because they serve a very different purpose, and the court is overburdened with solving such cases and deciding such cases. And basically, again, as we said, there were some very strong comments on the manner in which it was argued. Specifically, the judgment specifically names Mr. Dushyanth Dave and the arguments, some of the arguments put forward by him, which they said, the judgment says, was an attempt to malign the image of the judiciary, as well as some comments against Mr. Prashant Bhushan.
Okay, that's Arpan. Thank you so much for that. News flashing on your screen. Indusind numbers has just come out. Fourth quarter net income has come at 953 crore. Gross NPA at 1.17%. Provisions at 336 crore. This is gross NPA has come in marginally higher than the previous quarter at 1.16%. Fourth quarter interest income has come at about 46 crores. Interest expense is also marginally higher. We'll get you more details on that, but the headline number, net profit at 953 as against an estimate of 964, broadly in line with expectations. That's Indusind for you. The stock is marginally trading lower. The management is expected to address the media anytime soon. Let's get back to the story of the Supreme Court. Prashant Bhushan, who was representing the petitioners, has criticized the verdict, calling it today a dark day for the Supreme Court. Listen.
मेरी राय में ये एक बहुत ही गलत फैसला हुआ है, और सुप्रीम कोर्ट के लिए मेरी राय में एक काला दिन है, क्योंकि सुप्रीम कोर्ट ने बजाय इसके कि भाई एक स्वतंत्र जांच हो जाए, जब इतने सारे संदेह उत्पन्न हो गए थे, उस पर पर्दा डालने का काम किया है इस जज लोया की मौत के ऊपर.
That's Prashant Bhushan for you. Meanwhile, former Attorney General of India, Sali Sarabji, lauded the Supreme Court verdict, saying it sends out a clear message. Don't file frivolous petitions and question the integrity of judges unless there is solid material to back it up. I just caught up with him earlier today, and here's a slice of that chat.
Well, I've not read the verdict in full, but from what I've heard, and my information is, the Supreme Court has taken the view that these were just allegations without any basis. You can't write PILs just for the purpose of publicity or for the purpose of serving some vested interests. PILs must be based on cogent, solid, concrete material. You can't file a PIL and just cast doubt on the integrity of judges, on their independence. That would be a very bad thing, and it's so good the Supreme Court has given this verdict to discourage the filing of such frivolous petitions.
So, Rabji, the court has also made some extremely strong statements and expressed their anguish about how particularly about the conduct of the petitioners, the counsel of the petitioners, and said unfounded allegations and aspersions have been made against the Administrative Committee. In your past experience, have you seen anything of this nature in the past?
Well, not to this extent, but the tendency now is to make unfounded allegations, which I find very distressing. You can't do that. You can't deter judges from discharging the judicial functions by making allegations not based on any solid material. Because after all, suggestion was that they are in effect doubting the correctness, integrity of the judges, in effect. And that can't be allowed to be done unless, of course, there is no solid material on the basis of which you can do that. But here the Supreme Court found there was none. And to that extent, I think the Supreme Court is right in dismissing it. But I believe they didn't take contempt action against the petitioners just as well, so long as the message is gone. Message being, don't file frivolous PIS, which affects the due administration of justice. Don't cast aspersion on judges unless there is solid material to back it up. Because now it's become a fashion to file PIL, to make all kinds of allegations against judges, and that should be checked. And I think the Supreme Court judgment, to that extent, is a good judgment, will discourage filing of frivolous PILs.
That's sorry, Sorabji. Let's shift focus back to what's happening at Indusind Bank. Gross NPA number has come in at 1.17 as opposed to 1.16. The headline is at about 953 crore on the net profit. Shraddha is standing by to take us through some of the fine print on Indusind's fourth quarter numbers. Shraddha.
So Harsha, like you mentioned, more or less some of the key parameters have come in line with expectations. So net interest income has grown by about 20%, come in at 2,007 crores. That's close to the number that the street was working with. Net profit has also grown by about 28% to come in at 953 crores versus the number of 964 that we were working with. Operationally also, they have seen a decent growth, 1769 crores versus 1572 crores. But provisions have risen sharply on a Q-on-Q basis, whereas analysts were expecting it to remain stable. So provisions has come in at 335 crores versus a number of 236 crores, and that is on account of a divergence that they have reported. I'm going to go to that just in a bit. The gross NPAs in an absolute basis on a sequential terms has risen 13%, but overall as a percentage terms it seems steady at 1.17 versus 1.16. Now what they have shared is the FY17 RBI audit outcome, where the divergence in NPA has come in at 1,350 crores, and the divergence in the net provision has come in at 350 crores. The breakup of the divergence is, as I talk, one was for the large standard cement M&A bridge loan account. This is for which they had made one-off provisioning even during one of the earlier quarters. So that itself accounted for 500 odd crores out of that 1,350 crore difference. Then you also have loans which were sold to some asset reconstruction companies at 118 crores, and then some of the fully loans repaid, which stands at 258 crores. So accounting for all of these details that they have mentioned, the balance of the divergence that they have recognized as gross NPA as of 31st March 2018 stands to 81 or 82 crores. So that a difference, the divergence difference of gross NPA, as was pointed out by the RBI, which stood at 1,350 crores at the end of March 17, is now at 82 crores at the end of March 18. Just one more point, they have said that they have made adequate provisioning for the fraud which was detected with respect to Gems and Jewelry Group, that is Gitanjali Group, but they haven't mentioned what that amount exactly is. So the divergence number is something that the street is probably going to focus on, because otherwise the numbers seem broadly in line, at least as far as the operations are concerned. I believe we have an analyst with us on the phone line, Ashutosh Mishra from Reliance Securities. Ashutosh, just your first thoughts on the numbers and more importantly the divergence that they have reported. Not expected, was it?
So this divergence was on expected line because management has indicated in the last quarter's call that the RBI audit is still going on, and this cement account, which Ultratech, which has taken over, is already part of the divergence. So the quantum we were expecting a bit lower, but definitely what they have disclosed is a quantum relatively higher than what was earlier estimated by us. But yes, the divergence is coming, is a little bit known because they have indicated that in the last call.
All right, so you don't think the street is going to look at this number negatively, or at least react to the asset quality numbers?
So the most important part in the divergence disclosure, if you look, the net impact of the divergence in this, as on 31st March 2018, is only 185 crores to the gross NPA numbers. So that is well taken care of in the terms of higher provisioning what they have done. So overall, it will be not greatly negative for the banks.
And Ashutosh, the advances growth has come at 28%. What were your expectations? And do you believe this is mostly aided on account of the strong growth in the vehicle finance book, or even the corporate credit book, which the management had highlighted last quarter was picking up?
So this is both. Definitely vehicle finance, every one of us knowing was going quite fastly, and Ashok Leyland and other sales number was indicating that growth will be quite strong for the banks in this quarter, and they are the predominant player in that. Apart from that, many private banks are witnessing.
All right. So Ashutosh, just want to understand what are you going to be watching out for from the management commentary, the one or two key aspects, and what is your call on the stock at these levels after the numbers?
So we are at the positive on the stocks because what we see is the Bharat Financial merger is a big positive for the banks, and post this merger numbers will go into the return ratios, and the other operating ratios is going to improve further for the banks. And the most important part, and we will going to look forward whether gems and jewelry sector is going through a major structural changes from the RBI front, because LOU and all other things has been completely stopped by the RBI. So what is there any exposure which may come into a negatively surprise and declare as the NPA in the subsequent quarter? That will be the key themes to look at.
All right, Ashutosh, thank you very much for joining us. The stock, of course, reacting to probably those divergence numbers, down about 1%. Back to you, Harsha.
Thank you for that. That's the stock for you. The stock is trading about 2.5% lower as we speak. Divergence of 1350 crores in the gross NPA level. We'll wait and watch as the management will address the media in a short while from now. MD and CEO Romesh Sobti will be addressing the media in a short while. We slip into a short break. We'll get you back to Indusind and also talk about oil prices. That's coming up in a moment from now.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. This is Power Lunch on Bloomberg. Quint headlines at this hour. Steady gains on Dalal Street and key indices gain around 0.25% each. Mid-caps gain in line with frontliners. Oil prices rallied to their highest level since 2014. US stockpiles fell by more than analyst expectations. Samajwadi Party President Akhilesh Yadav promises to do all he can to unite the opposition and form an anti-BJP alliance. That's a Bloomberg Quint exclusive. What's flashing on your screen is right now on top of the market's mind. Indusind Bank divergence at 1350 crores on the gross NPA front. The stock is down about 2%, 2.5%, about 1.5% at this point. That's bank story for you. Agam is standing by with that and some of the other stocks at this juncture. Agam.
Well, Harsha, of course, when it comes to the markets, we're looking at consolidation continuing. What really stands out in the broader markets, and when it comes to the mid-cap and the small-cap indices, they are, to a certain extent, outperforming the major indices. I actually want to draw, focus on the metals pack, because the metal index is a top gaining index today, and this is largely on account of the gains that we've seen in the likes of Hindalco, Vedanta, as well as Tata Steels. On the other hand, on the losing end, what's also bearing down on the indices is oil marketing companies such as HPCL, BPCL, and IOC on, should I say, strengthening cues coming in from crude oil. We're also looking at a little bit of an uptick in the futures and options turnover, and this is largely because of the fact that we have the weekly banking options expiry. But other than that, when it comes to the cash turnovers, well, largely average, despite the fact that we are expecting some very big ticket earnings. And as we've already seen in case of Indusind Bank, we've seen a little bit of an uptick in terms of volumes in just the last 5 minutes. We're awaiting earnings from TCS, and that should perhaps give us an indication of where markets will head from here on.
Fair. That's the TCS stock ahead of those numbers. We'll keep a close eye on that. But let's move on. Nilesh Shah of Envision Capital is bullish on Tier 2 technology companies. Speaking to us on our special segment, Alpha Moguls, he says that weakening rupee will further aid the margins of IT companies. Listen.
So I think what we've seen in the technology space is that, I think by and large, most of the players in technology space were clearly kind of becoming reasonably well entrenched into some of the new tech or the emerging technology kind of areas. I mean, obviously, of course, things like digital and all of that. But what we really started to see is that some of these companies have started doing a lot of commendable work in that space. And what we saw was that, or what we thought then was that over the next 3 to 5 years, these new areas will become a much larger part or a component of the overall revenue pie for most technology companies. But within that, what we saw was that the Tier 2 technology companies, they essentially were doing even a better job because of their focus, and because that the size was relatively small, their ability to turn around in terms of the business model was much, much better. They had a greater flexibility in terms of basically changing their business model. And what we thought that is that they had already spent the last 2 to 3 years trying to do this. And I think they've been meeting reasonable success on that front. And what we thought was that the kind of investments that they'd made over the last 3 years, it's quite possible that over the next 3 to 5 years, it would be time for them to start harvesting on these investments, and these investments would begin to pay off. And I think you're beginning to see that in the start of 2018, where a lot of the Tier 2 IT companies have started to kind of get re-rated. And we still think this is the beginning. Of course, valuations have run up a bit in the last 3-4 months, but we still think that I think they should be fine over the next 3 to 4 years, provided you are a specialized player focusing on a specific domain or a capability and offering much better value to your customers.
So you back then you believed that the investments that they have done will start bearing the results, and there was a general shift in the demand climate. I mean, am I getting this correct?
Yes, I think that's bang on out there. And the fact that, of course, the world economy looked or seemed to be in a much better shape, okay, versus where it was 3 years or 5 years back. And when that starts to happen, a lot of discretionary spending starts to kind of come in. And obviously, of course, technology would be a disproportionate beneficiary of that. And within that, of course, India conventionally has been always having a cost proposition to offer. So India has been able to offer fantastic services in the technology space at a reasonable price. So there's clearly a value up proposition which the Indian technology sector were to happen. And last few years have been tough for them on terms of the currency side. And it's quite possible that even a little bit of weakening of the rupee or a little bit of appreciation of the dollar over the next couple of years really could add to their margins, which in turn basically could drive growth for these companies.
Nilesh of Envision Capital. Former Uttar Pradesh Chief Minister and Samajwadi Party President Akhilesh Yadav says his party will do all it can to unite the opposition ahead of the 2019 elections. Speaking to Quintillion Media's editorial director Sanjay Pugalia, Yadav says the regional parties will play a big role in forming an anti-BJP force. Listen.
थोड़ा सा डिटेल में स्पेसिफिक बात बताइए आप कि सपा और बसपा का अलायंस क्या हो गया है, क्या सीटों के बांटने के फॉर्मूले पर बात हो गई है, क्योंकि सिर्फ आप दोनों के मिलने से अरिथमेटिक से काम यूं नहीं बनेगा, क्योंकि बीजेपी कई इलाकों में 40-40, 50-50% का वोट शेयर लेकर के बैठी है। तो सिर्फ आप लोगों की यूनिटी का आइडिया अभी फ्लोट हुआ है कि आप दोनों मिलके लड़ेंगे, तो ये आइडिया से एग्जीक्यूशन का जरा किस्सा समझाइए।
देखिए, एग्जीक्यूशन तो हो चुका है और वो आपको 2 एग्जाम्पल मिल चुके हैं, एक फूलपुर, एक गोरखपुर। मुख्यमंत्री उप मुख्यमंत्री दोनों हार गए। उसके बाद एक प्रयास हम दोनों ने मिलकर के राज्यसभा चुनाव लड़ाया। हालांकि ये चुनाव गिनती का होता है और सरकार का दाव बहुत चलता है, दबाव भी बनाती है सरकार। सरकार ने हर तरीके से समाजवादी पार्टी और बहुजन समाज पार्टी का प्रत्याशी न जीत जाए, उसके हर हथकंडा अपनाया। झारखंड में तो विधायक आकर के जेल से वोट डाल रहे हैं, लेकिन उत्तर प्रदेश में नहीं डाल सकते। इन्होंने वो 2 वोट हमारे खराब कर दिए, क्योंकि बीजेपी राम भक्तों को बहुत पसंद करती है। बीजेपी ने उसे भी पसंद किया जिन्हें रम में राम दिखे थे, तो रम में राम वालों को भी ले लिया अपने संग। तो 2 वोट वो हमारे चले गए, एक बसपा का चला गया, तो 4 वोट तो हमारे ये खराब हो गए। और फिर कुछ और लोगों ने भरोसा दिलाया था, वो वोट भी हमें नहीं मिला। तो ये तो हम गिनती की लड़ाई हार गए, लेकिन दोनों ने साथ काम किया। और उसका परिणाम क्या हुआ? अभी इस प्राथमिकता पे सबसे पहले एमएलसी हमने उन्हीं के प्रत्याशी को कहा कि आप लड़िए।
नहीं, बिल्कुल ठीक है, जेस्चर तौर पर। और
All right, interrupting that because Romesh Sobti of Indusind is addressing the media. Let's listen in.
Again, the press release is already in your hands. We have uploaded the investor presentation also on the site, so all the information is there. We don't have to labor through each and every line there, but let me speak through some headlines. So if you look at Q4, I think Q4 was dominated by a particular item on what we call operational risk, which came out in a particular incident in the industry. Operational risk, you know, we've always felt is one of the least appreciated risks that banks carry. We all know about market risk and we know about credit risk, but I think this incident has also refocused attention on the whole concept of operational risks and the whole issue about who's doing what, where, when, and do you know it. So I think that's one factor that really dominated. Of course, there are a couple of other regulatory issues. One, of course, was the deferral of the NDS. And of course, also, I think in 2015, RBI had brought about this concept of the counter-cyclical capital buffer. That also has been stayed for the time being. Of course, the investment fluctuation reserve has been created, which probably will have a little bit impact on the profitability of banks, but not too much, and maybe also on the capital. Because there's a lot of discussion around the February 12th circular and what it does in terms of creating a new discipline in the banking industry. Personally, I feel that it's a good stepping stone to the introduction of NDS. It brings about a discipline, and I think the Deputy Governor spoke about the need for such a discipline as well. So that's, I think, as far as the bank's performance is concerned. Can we bring about this thing? So we have finished year 1 of what we call planning cycles. This is planning cycle 4. We started from 1st of April last year, and we'll end of March 2020. So we are tracking well on what we had said we will achieve in the planning cycle, cycle 4. We show you how we measure up to that. Q4 PAT growth came up at 27%, despite the fact that the industry as a whole suffered mark-to-market losses on the bonds portfolio that they've held. Fortunately, we didn't have any losses, and therefore we've not had to amortize any of those losses as were allowed regulatorily. But of course, the gains came down. Therefore, trading income was down. But in spite of the fact that trading income was down 56%, we've shown a PAT growth of 27%. The interest margin remained stable. We are at 3.97. We raised our MCLR by 40 basis points during the quarter, which is a reflection of what's happening in the cost of deposits markets. Deposit prices have certainly moved up. Credit growth came up at 28%, and we did see a surge in the growth. And there are three elements to the credit growth. One, of course, is the solid surge we are seeing in the growth of our vehicle finance businesses. Vehicle finance, last quarter itself and the quarter before that also, we could see momentum coming in, and quarter four showed a solid momentum overall. So if you saw that disbursements, quarter-on-quarter disbursements on vehicle finance went up by 12%, and year-on-year they went up 47%. That's the entire portfolio. If you look at just MHCV, which is commercial vehicles, MHCV alone grew year-on-year by 67% and grew quarter-on-quarter by 27%. So you can see the surge in our vehicle finance industry, and overall the book grew by 24% year-on-year. That's one part of it. So that's what we call the vehicle finance retail portfolio. Then there is a non-vehicle retail portfolio, which also grew by 30%. And the growth was very secular when we also saw a surge in the growth of our corporate book, which also grew by almost 30%. So a 28% growth in our credit portfolio, and of course a robust growth also in the deposits. As you know, the industry grew by about 5-6% on deposits. We grew by 20%, so well above industry growth. Our gross NPAs were stable at 1.17%, and even after considering one-offs, some of the one-offs were caused by divergences, and we'll show you the detailing of the divergences as well. And of course, we have upfront taken the only what do you call it, troublesome account that we had in the diamond industry, which is well talked about. There are two. We don't have one at all. The other one was a legacy account, which we have treated as a fraud. The rest of the industry is still working on it. It is standard with all banks, but we have taken it, classified it as a fraud, and we have provisioned as per RBI norms. So we've done that. That was the only account that we had there. So credit cost for the whole year comes at 62 basis points, which is flat, and the year before that was also 62 basis points. So it doesn't make any impact really on either our gross NPAs or our credit costs for the whole year. Other than this, the client base has grown up to 11 million. We grew by 6 lakh customers during the quarter. That's the new run rate. And our target of 20 million customers by March 2020 doesn't seem to be too aspirational. The earnings per share grew up to 63 rupees, 63.5 rupees. Our cost to income ratio fell by 1%. So cost to income has actually also gone down. Other than that, we have on the digitization side, there's a lot of interest on what happened in digitization. We were the first bank to introduce WhatsApp banking. There's been some coverage of that and other thing. I don't know whether we can talk more about it. WhatsApp should be talking more about it, then we should be talking more about it. And I think the thing that we are really happy to see is that our mobile app was rated number 1 by UBS, and it was number 2 by Fortis last year. So I think these are the thing. Our branch network is going apace, so we are on target to achieve our figure of 2,000 that we had said for planning cycle 4 by March of 2020. So that's a brief sort of headliners on this thing. Yes, the other developments, of course, were that we got 2 approvals for acquisitions during this quarter. One was the Bharat Finance. We got an NOC from RBI. Before that, we had got approval from the Competition Commission, the CCI, this thing. We are now awaiting approval from SEBI, post which there will be the NCLT approval, and therefore we look to be on track to integrate this business in our business by mid of this year, or maybe around July of this year. So that is one approval. The other approval, which is also in the public domain, was on account of a company called ISSL, which is a subsidiary of ILFS, which is a market leader as a professional clearing member of the stock exchanges. It has a 20% market share of the professional clearing membership. A professional clearing member is like the broker of brokers, you know. So that also, I think we need only need now SEBI approval. There's no other approval needed, and that integration should also happen sooner than later. So these are 2 highlights in terms of approvals. I think that's the headline. I think a little bit because you all will delve into it. So let me show you this whole thing about the divergences as a thing. We have a slide on that. It's also uploaded on our site. Yeah. Okay. So the divergence number was 1,350 crores, and we've given, it's of course in the SEBI format results we've declared, we've shown that. This is an explanation of that, and also to show you what is the net impact. The net impact is the bottom line, that the gross NPA moved by just 186 crores, and it had just maybe a 2 basis points impact on our credit cost for the full year. So I think the only explanation that we need to do is that there's one large figure you see there, 518, which was actually also seen last year. And this is that large CMET account where there was a bridge loan, where we were repaid in June of 2017, but for legacy reasons, this is still being shown as a divergent account because it has no impact whatsoever out of this thing. This was shown last year as well, and it has been repeated in that sense. I think we had made a full provision as of March 2017. We had made a provision for it, and it was repaid by the year. That's the big one. And of course, then you see others that were already classified as NPA. It was only timing issues, and as a consequence of this, the net impact that you see at the bottom line is 185 crores on gross NPA, not on the provisioning. So gross NPA figure just moved by 185 crores. But other parts of the gross NPA book also caused recovery. Therefore, the overall gross NPA book just moved by 1 basis point, from 1.16% to 1.17%. So there was, I mean, I don't want to overemphasize this, but there was hardly any impact as a consequence of this thing, if you see the breakup of this divergence number. Okay, anything else we want to show? Oh, yes.
Sir, please believe me, I am in this business for the last 12 years.